Right. Hey, Facebook. How's it going, 80? So, for those who are in... I don't know if anyone else is here. I know 80 was. Maybe Aaron is here as well. I was just on another chat just now, and I was on a panel of a mergers and acquisitions chat, and I was just talking through... In fact, I never got to finish the end of what I was going to say. I kept getting interrupted. Hey-ho. But one of the things I said was blah, blah, blah. During the deal, right at the beginning of the deal, I lift my skirt up to share all of, the potential problems that could happen, blah, blah, blah. And there was a guy on the panel that got offended by that phrase. I just said lifting my skirt up. And I was like, I'm sorry, it's Women's Day, and I can't be having that. It's actually offensive to... there are women in this group, and it's offensive to use that term. I was like, what? Anyway. My opinion is that there are...
Yes, Siam, perhaps you don't know, but that's quite an issue, and that's probably a term I would not advise you to use, really.
Really?
I'm not offended, but I understand why people would get offended.
What? How is it different? Okay, if I said I just drop my pants and share everything. Okay, it's a vulgar analogy, I guess. Yeah, I'll probably need to find a different thing, but yeah, I just have no time for politically correct people these days. Yeah, I will. Any good suggestions on better things? I'm not good with my analogies, but anyway.
I don't know, revealing my tools, revealing
yes.
all I have, I don't know.
Fair enough. Right, okay, it's 12:01, let's crack on with the main topic. Today we're going to talk about to be a sole trader or a limited company, and when you really, really, really do need to be a limited company. So the first thing is, I'm not an accountant, I'm not a tax advisor or specialist, I'm simply a normal business owner from Norwich, just doing my thing. And so this is really handy that Rosita is here today, because she is an accountant, and so I'll be able to bounce some stuff off her, because no doubt you guys will have some tax related questions and I won't have a clue, which is fine. And as a business owner, you're not supposed to know everything. What you need to do is get people around you who are better than you in terms of knowledge and or skills, and so that's why you should have an accountant, etc. So the first thing I'm going to say is that regarding accounting, I've been through the ringer with accountants and accounting and stuff like that, and accountants forgetting to file your year-end tax returns and year-end accounts, and then you get in trouble because you're the director, you're the one that signs off and everything, and this will save you a whole bunch of heartache. What I do now, and what I highly recommend in business, if you are a business owner, is that you get a normal bookkeeper. So someone to do the day-to-day gubbins, data entry or whatever. I mean, and someone to manage your Xero and receipt bank. So first of all, it's worth getting Xero or QuickBooks or one of the other, there's lots. They all do the same thing. But use one with bank reconciliation stuff, so automatic bank feed stuff. And then also get receipt bank. So if you have a receipt, you simply scan it, and it goes straight into the cloud, and the algorithm knows what type of receipt it is, etc. Or if you have an invoice that's come in through email, you just forward it to the right thing. So so receipt bank and what did I just say? QuickBooks or Xero. So, and then your bookkeeper, who's going to do all the stuff, they manage all of it. Now, personally, I've got lots going on. It's eventually, when your business gets big enough, it is worth getting a full-time bookkeeper, whether they're working in the office or not, or at home. You need someone, working at least Monday, Wednesday, Friday, at least. Just, because sales are coming in during the week and issues crop up, etc. It's better. You get better results if they're working in your office, because what you lose through remote working are all the little side chats. People, you can listen to all the different conversations going on around you, and if you have a query, what's that, blah, blah, blah. So it's those organic side chats which are really valuable, and you don't get that with someone working, remotely. So, but yeah, what you need is a bookkeeper. Now, the problem I did, and what a lot of people do, is that they go to an accountant and they ask for everything. They're like, hey, I'd like to be, I need an accountant and I need bookkeeping, I need this. And that is not what you should do, because what happens is that you'll have an accountant, someone who you've formed a relationship with, who will probably do your accountant type stuff, but then they'll pass it on to one of their miners or bookkeepers, etc. And in theory, it should be fine, because the bookkeeper and accountant are in the same in the same place, etc. But and it's not just me. I mean, I've got 9 companies in the group, and I've done the old method so many times. Because I was like, well, that's what everyone does. That's what you should do. It makes sense. But in reality, it doesn't work out that way. And so what I have now is a bookkeeper that does just bookkeeper stuff. I have an accountant that does, the official stuff. So year-end tax returns. That's pretty much it. That's all I use accountants for, just the year-end stuff. And then you need to, probably once every 2 years, pay top dollar for a tax specialist that is congruent to your niche. And what a tax specialist will do is, you'll probably sit down for 2 to 3 hours and, pay whatever they're asking, 500 quid an hour, whatever. I'd happily pay 1,500 quid a session every, 18 months or so. Because what happens is they'll in that 2 to 3 hours, they'll really understand your business and where you want to go, and they'll properly plan out everything with you. And then once they've fully understood, what you're trying to do, the tax specialist, whoever, the best in their field or whatever you're doing, or then help direct you on what you should be doing tax-wise, tax efficiency, make sure you're doing tax avoidance, not tax evasion. Evasion is legal, illegal, avoidance is legal. And so it's those 3 elements. And that is what works best. So a bookkeeper to do the day-to-day gubbins, an accountant just to do the year-end tax return and filing year-end accounts to Companies House and HMRC, and then that's it. And then tax advice from a tax specialist, because I've actually been hurt by getting tax advice from my normal accountant. So you need to compartmentalize them, and apologies if there are any accountants here. I've been stung so many times. The amount of times my accountant has screwed up and then I've had to pay the fine or get the black mark because they forgot.
Yeah, I'm smiling. You're preaching the truth.
Oh, cool. Oh, wow. So, Rosita, you're an accountant. It would be great to hear your side of the coin. I'm surprised that you agree with me.
So I'm actually, I second everything you said. So I'm a tax advisor, and I undertake, because I run a small practice, I do exactly that. When I take on a client, we go through absolutely everything. I find out everything about their life, not just their business, everything, their goals, their past, where they're going, what's happening. This is what I want to know. And then I will pull all the strings together when it comes to tax. And like you say, define a strategy, find all the, ways of you to save tax. And then Either I do my self-accounting, depending on the complexity of work, because not every accountant will be able to undertake certain tasks like you suggested.
Yeah.
If not, I do subcontract accounting work. I have a number of accountants working for me, and I have a bookkeeper, and I do exactly that, Siam. I actually put directly in contact my clients, and they deal with the bookkeeper. We have meetings together. I deal with the bookkeeper, I deal with the client, and it's all, like you say, those side chats, they are absolutely invaluable.
Yeah.
And we have those, and so we're able to keep actually what you're saying, but a lot of the time, there is a miscommunication. Communication breaks down between bookkeepers, accountants, and, like you say, tax advisors. They equally, all of these skills are valuable, and you need all of them. It's just people don't know that they need them. It's like you say, they go to an accountant, and often they will call themselves tax accountants, but they're not qualified in tax, and the knowledge, unfortunately, is limited. And like today, I've got a client yesterday who I spoke to, who's got 5 companies, and she says, well, my previous accountant has filed 2 returns for 2 companies. And I said, but I just looked on the company's house and it's not filed. She said, well, I've just received a report a month ago, and he said he's going to file, and I've signed them, but they've not been filed. So, Siam, you're telling the truth. It's how it is.
It's nuts. Like, I think this happened like 2 years ago. I think that the biggest hiccup happened 2 years ago, where my accountant forgot to file, I think, the year-end accounts to company's house for the realistic trader. That was it. And what happened is that I then got, basically, if you are late in filing your company's house accounts, you then get fined. But also, they then put a compulsory strike-off notice or something, because they think it's your company's gone dormant. Or
you can't get that far. Yes. Yeah. If you've not filed for long enough, and obviously they're not aware, and nobody's notified them on anything, they can do that. We've got here Zoe. She's a bookkeeper. I've not spoken to Zoe before, but perhaps Zoe, if you want, maybe Zoe could come up and give you some support and
cool.
advice.
Hi, Zoe. Zoe Whitman, Bookkeepers Podcast. Very handy. Yeah. In fact, you have the mic, hopefully. Hey. Hi, Zoe.
Hi, everyone. Sorry, I missed the question, but I'm happy to try and help.
No, it's not a question. It's a conversation. Siam and I were discussing, and Siam saying how everybody. Well, Sam, actually, you go ahead. I'm taking over.
No, that's cool. That's what we're here for a chat. There hasn't been a question just yet, but in a nutshell, what I was saying, that from my just personal experience in business, it's best to have a bookkeeper to just do all the day-to-day stuff, the bookkeeper stuff, an accountant to do the official accountant stuff, so year-end accounts and filing it, but don't take tax advice from your accountant, but then actually once every 18 months or so, maybe 2 years, you pay good money to go and find a good tax specialist within your niche to then really guide you for the next 2 years. So that's what I find works really well now, whereas before, when I had accountants that did everything, bookkeeper, accountant stuff and tax advice, I would always get screwed over and given really bad advice.
Oh no, that sounds like you've had a terrible experience. I think it's an interesting approach, and I think if you can find somebody who is going to serve your business and is the right fit for your business, you might well be able to find someone who does everything. There are some brilliant accounting firms who have bookkeepers in-house who also have tax specialist teams, and if you can find someone like that, and you can perhaps see who is on their client list at the moment and see whether there are businesses like yours, then that's going to be a good guide as to whether they're right for you. I wouldn't go with an accountant just because someone else says, oh, I've used them and they were all right. I would definitely do a lot of research on it and see if it's a good fit. But what you said about having a bookkeeper and an accountant, you don't want it to be disjointed, but a lot of people, I ran a bookkeeping practice, and now I'm working in an accountancy practice. I work with a lot of bookkeepers, and I think a lot of people will start out with an accountant because they feel they need to do that compliance part at the end of the year. They need to get their accounts filed, and they won't necessarily check in with their accountant at the beginning, and that's maybe a financial choice, because in your early days of running a business, every penny counts and you don't want to give it to someone else. But if you can commit to spending a bit of money with somebody who's going to be able to support you monthly, I think it's a really good investment, because, well, first of all, gives you some time back and you can go and make some sales and do what you're actually good at. But also, you've got somebody really engaged in your business throughout the year, and I think that's where bookkeepers come in. Bookkeepers and really good accountants. Accountants get really bad names. There are some great accountants out there, but if you can find a great bookkeeper, they are kind of like your in-house finance team, and they will be there. It's like if you had a finance team, they would be there for you, doing your stuff day to day, answering your questions, and they're the ones who are going to be best placed to give you the insights into how things are going, how profitable you are, any challenges coming up, and that your systems are right. So you do need a combination.
I agree. I found that the best results were when I had a really good bookkeeper, because like with many different accountants that I've had over the years, what would happen is, because they're quite removed, yes, they'll be doing the bookkeeping or whatever, but probably every week or two, the bookkeepers and the accountants would then send me a massive essay-long email with a spreadsheet of like, what's this, what's this, what's this? I'm like, you're my accountant and bookkeeper, you should know this already. Like, and I mentioned yesterday in another one, I had an accountant for 2 years, and then 2 years in, he sent me this big old, he was doing his VAT return or something like that, and he was like, what are these sales? And he's like 40 grand's worth of sales. I was like, these are our normal sales that you've been logging for the last 2 years. Exactly. And so obviously the problem that comes with what I found with a lot of accountants is that because they're managing so many different companies, it's hard to keep track on what's happening with every company. So that's why I'm a big fan of having a bookkeeper in-house, because then they know your business really, really well. So and in terms of
I agree with that, Sam. Sorry, go ahead.
Sorry?
No, so I just said that I agree with that.
Cool.
It's like you see, I'm committed with the traders, educating traders, and I'm equally committed with in educating business owners when it comes to their finances and tax and accountancy and bookkeeping, and where the boundaries are, and how important it is for them to know, because often people just want to hand over the work, like you say, to accountancy firm, and assume that this is all going to be taken care of. And often, like you've experienced, Siam, and I can say from professional experience, is exactly the same. Perhaps there are those firms, Zoe, who will be able to do everything, but more often than not, that's not the case, and that's why I get lots of work, often because of that, because it isn't working how it should be. The companies become too big, personal touch is lost, and people don't understand your business anymore.
Yeah.
And I think that's the question when you're sort of think of yourself as interviewing for an accountant or bookkeeper. When you're looking for someone to support your business, make sure you're asking the questions, will I have a dedicated contact that I can speak to? They're not going to be the person who knows everything, but they're going to be the person who can help you find the way around the business and access what support you need. I think also business owners need to be prepared that if they want that level of service, it's going to cost. So
Agreed.
The reason accountants have a terrible reputation of piling them high and selling them cheap is exactly that. Like, they have to do that to get the work in, and unfortunately that does mean in a lot of practices you won't get the personal touch that you want. I think the profession is changing. I think there's a lot of pressure on accountants, but it's actually the pressure is actually coming from bookkeepers, because bookkeepers are up leveling. They're like, hang on a minute, we've got all the insights here, why are the accountants making all the money here? We can do so much more. And then accountants are realizing they need to do that too. So I think it's changing, but really, don't go to your accountant down the road just because they're convenient. Really do your research and ask people who are in the same industry, who are they working with.
I made that mistake. I literally, after I think having 4 accountants that didn't work out, I was like, okay, because I went after so the first accountant is really good, actually. He was a really lovely guy, but then he grew massively, and then he started buying other accounting firms, and he went from like a 3-man shop to a 150-man shop. And before you know it, I had 5 points of contact, and that was, we're still good friends, but it just didn't work. And then I went to Norwich's biggest accounting firm. That was a bag of balls. I then went to Norwich's second biggest firm. That was just horrendous as well. And this was over the period of a few years. I tended to spend probably 18 months to 2 years with each one. But yeah, it's rather interesting. So in fact
we've got a couple accountants here, Siam, in the audience.
Amazing.
Was just to make sure we were not slagging.
Oh no, I don't. No, I'm not slagging accountants off at all. Not at all. They are absolutely.
We're defining the boundaries and what's the best for a business owner,
and
how to choose the right people to work with.
Yeah, and one of the best, I think if you're in the market of looking for a new accountant, one of the questions which I would definitely ask is what lagging and leading indicators does my business need, and what will you? In fact, how to go? Yeah, what I say is what lagging. In fact, yeah, what lagging and leading indicators does my business need? So you should ask this once you've explained your business, etc. And what I mean by lagging and leading indicators is, for example, looking at your profit and loss at the end of the month. That's a lagging indicator because it just tells you what's happened over the month. Whereas a leading indicator, in fact, your accountant should be asking you this in the interview and saying, hey, so what would you say your leading indicator is? Now, most business owners will be like, I have no idea. And so I think this is an occasion where the accountant and the prospect or the business owner needs to try and work it out. So, for example, in one of my businesses, we send out loads of free books. So people, so people ask for a free book. We send out a free book with, a Kit Kat, etc., etc. And we know our conversion rate. So for X amount of books that we send out every week, we know that X% will become a proper lead, and then X% of them will become a proper customer. And so therefore, the amount of books that we send out per week is a leading indicator for me. So I remember this was probably 4 or 5 years ago now. I had a relatively new-ish sort of admin team, and the admin team they weren't following the SOPs correctly, the standard operating procedures that we had, and they let the stock of books go too low, and we ran out. And when I found out about it, when the ops manager sort of briefed me after the event, I was like, oh my lord. So this was a big deal for me, but for everyone else was like, why is Siam annoyed that we've run out of books? And the thing is, the lead time, well, in order to get more books, it was like a 3-week waiting list, and we had like 200 people that requested a book. Now, yes, obviously having to wait a few extra weeks for a free book is fine, but I knew that hiccup, that massive sort of air bubble in the IV drip or whatever, would cause a massive issue, because if for example I wasn't sending out free books for 3 to 4 weeks, what that meant is that down the line, probably 2 to 3 months later, I would have a 3 to 4 week period where I would have no cash flow, or sales would just drop off a cliff. And so I had to explain this to the team and saying, look, our books. So that was my issue. I didn't explain the importance of the books to the team, and I was basically saying, look, in probably 3 months' time, we're going to have a month where sales will just drop simply because we're not sending out any free books. And so that is an example of a leading indicator. And so what I do with my bookkeeper, not my accountant, but if you're an accountant that has the bookkeeper in-house, then I think it's worth doing. I ask for certain things to be sent every month. So, or every month and every week. So every week I'll have a whole bunch of metrics which are important to me as the business owner that will be emailed to me. Oh no, I hate email. WhatsApped. So or Discord. We have two things, but it basically just message me. So every week I'll have a bunch of indicators or metrics that I want to see every week and every month. And a lot of people don't do that. A lot of business owners don't have regular metrics. They don't have a dashboard even. They don't know. And so I think if you're an accountant, it's one of the best things you can do. And if the business owner you're speaking to isn't aware of dashboards or stuff like that, you should definitely, for sure, discuss it with them and find out what their leading and lagging indicators are. I mean, we've got a few accountants here now. I mean, what are your thoughts on that? What would you say are the best lagging and leading indicators that you've found with various businesses? Okay.
It really depends on the business.
Yeah.
It really, but I think marketing activity, whatever your marketing activities are, you need to measure everything in your business to know what works first.
Yeah.
Don't you? So we all, any small business, it's quite exciting, I think, to do the marketing stuff. But unless you track it and you know what results in conversations, and it depends what you sell as well. In a service-based business, what activity am I doing that is then resulting in DMs? Okay, how many DMs am I getting from what I'm doing on Instagram or what I'm doing on Clubhouse? And then off the back of that, how many of those conversations are converting into actual sales? We have to track all of that to work work it out. I suppose I think about the social media side of things, but if you were doing like paid ads, you would be able to track how many clicks you had, or how much you'd spent on ads, or how many people had seen your ad. So just break it down to all of the different components, and then measure everything you can. It's boring, but make a date with yourself every week to go and check in on those activities you're doing and your stats, because if something's working, then you can do more of that, and then of course you can tie back your business performance and your sales and your profit to those kind of things. I've got to say, Kit Kat with a book, I think you need to be upgrading your chocolate offering. Sorry to think about. Double decker maybe.
No, it's all about the postage. If it's too fat, you then have to pay an extra £1.50 in postage, and so we're a flat 2-bar Kit Kat works a treat. In fact, I've just realised it's 24 minutes in, and we haven't actually approached the topic of the conversation, which is to be a sole trader or a limited company. So I'm going to have to redirect it that way. So here are my thoughts on, and then we'll open it up, on sole traders versus limited companies. Now, a lot of people, when they're setting up their business, do it incorrectly. They do the wrong things at the wrong time. And I see people getting very excited in the early stages about their business, and because that's what happens. We get overwhelmed with the excitement, and we're going to do this, we're going to do that. And one of the first things that a lot of people do is they incorporate their business from day one. They're like, and I was like, oh no, and it's not. I mean, it's not a totally horrendous thing to do, but it's a very inefficient thing to do. So when you're setting up businesses, you have two main phases. You have pre-poc and post poc. So pre, proof of concept, and post, proof of concept, and these are really important. So there have been so many business startups or projects that I've done in the past where I thought, it's going to do really well. I get everything set up, and then guess what? The business flops, it doesn't take off, no one likes it, everyone, for whatever reason, the business just doesn't take off. And so this is why I think when you're in the biz create or in the startup phase, you need to call your business a project, especially from like a mental issue, because in the early days I'd be like, hey, I'm setting up a new business, blah blah blah. And then 3 months later, all your friends and family go, how's your business, Siam? I'm like, oh, don't ask me. It didn't work or whatever. And there's a lot of pressure when you tell people on Facebook or your friends that I'm setting up a new business. So to begin with, you should just say, yeah, I'm just doing a little project, because projects come and go, don't they? And if it doesn't work out, yeah, it's just a little project. And so this is the pre-POC phase, the pre-proof of concept. And so this is where you get your ducks in a row, and you're getting your landing pages out there, you're getting your stock in, or a minimum amount of stock, etc. And then once you start getting customers, and you're actually making sales, and you're making predictable sales, so it wasn't like a lucky one-off one, but you're making predictable sales, and you're like, oh shit, I've actually got a business here. That is when you're in post-POC, post proof of concept, and that is when you need to start doing you need to start formalizing it, and that is there's the WAP in the WAP. There's a checklist. It literally just shows you bit by bit, and incorporating your business is way down the list. Now, in terms of the right time to incorporate your business, it is also down to revenue as well. Because if you're running a small side hustle business, etc., and let's say you're only bringing in £200 a month of revenue, then it most likely isn't worth going down the incorporation route, because there's all sorts of stuff you need to do. I mean, hell, just simple admin costs, it's roughly £2,000 a year for an accountant to file your year-end returns, etc., ballpark. And then there's all sorts of other bits and bobs. But if your side hustle or sole trader business is doing, something like, at least, call it £700, £800 a month. I mean, I'm sure there is a perfect sweet spot of, an actual annual turnover where you need to.
It's about £40,000, Siam. I haven't worked out the exact for this year, but previously it was about £40,000 when it's a good time to go onto a limited company.
What, revenue or profit?
Profit.
That's interesting. I would have said it's a lot lower.
Profit.
So why so high?
Well, because you've got to take into the account, like you say, all the expenses. So it's about between 30 and 40,000, something like that, depending on the industry you're in. Like you say, depending on costs. Yeah, like I say, Zoe's unmuted her mic. Perhaps she's done her calculations for this year, so she can tell you exact figure. I haven't done it yet, so Zoe, you go ahead.
Well, so I always think it's when you get to the higher rate taxpayer threshold, as in the UK, you're probably on the tipping point there of when, and it is around 45,000. If you're around there profit-wise, think about it. But I've got to say, please be really careful, because it depends on what industry you're in, and there are lots of other reasons to set a limited company. If it gives you a lot of protection. If something was to go wrong in your business, your company has the liability rather than you individually. So, in my world, I would never set up an accounting practice or a bookkeeping practice as a sole trader, because of the repercussions that could come to me personally. I don't want to lose my house if something went wrong and I owed a lot of money, So setting up, there are other things to consider beside the financial part of it, and also keep in mind the admin involved. So if you, like you said, Siam, if you get to a point where suddenly you're really busy, your business takes off, your project turns into this
business,
and you've proven your concept and you've got something that's really profitable, you've then got to go through the process of setting up new bank accounts, arranging new payments, so all of your customers know to pay you in a new bank account. So actually, I think getting your foundations right is important, and I know when you've got a product and you've got to prove whether it's going to work or not, that is part of the consideration. But really think about, what are my goals for this business? Maybe it's that if you're an entrepreneur and you've got loads of ideas and you're like, okay, I don't know which one's going to work out, but I'm working on quite a few projects, or I'm likely to work on different projects. Maybe you create a company under which all of those different activities can happen, so that if one line doesn't work for you, you can then do something else under it, and then you haven't got a number of different companies in existence, because your company can be called anything within reason, so it doesn't have to be linked to that company. So I think there are other things to consider as well, and have a conversation with an accountant or a solicitor about what's the right structure.
Yeah, and also there's a legitimacy element, because if you're in an industry where let's say you're a B2B business, business to business, like a lot of your clients probably won't do business with you if you're a sole trader, and they'll want to see that you're a limited company and maybe even VAT registered. I mean, there is some sort of snobbery with some sectors out there that. Sorry, were you going to say something, Rosita?
Yeah, definitely. Siam, I'm just going to second what Zoe said, and it's that famous. It all depends.
Yeah.
It's because I specialize in property tax, and I specialize in that setting. Advising clients on structures and whether like group structures are appropriate, and what have you, benefits and negatives of that as well, because if you're looking to invest, if you're looking to raise finance, say like via SEIS, seed companies, which you probably will all know about, Sam, they cannot be owned by another company. So those are the there are various issues. But I have to scoot to my appointment.
Yeah.
And if you're here within half an hour after my call, I'll jump on, and perhaps I could give you a bit more input on that. But
cool.
Yeah,
thanks for being here.
Thanks for having me. See you later.
Have a good day.
Nice to speak to you, Rosita. You too, Zoe. Take care.
Toodles. So, the other thing, which the reason, that's actually quite fascinated me regarding the best monetary time to go in. I've always done it a lot sooner. So typically my rule of thumb, and by the way, it's just a rule of thumb because I do things slightly different to most, is that when you realise that your project is now a business and actually it's going to last, that's when I incorporate, because then it's basically at the point where you think, okay, this isn't going to fall by the wayside. It's definitely going places, because as I think Rosita said, or I think maybe Zoe, if you incorporate later down the line when you're really busy and you've got lots of customers, you then have to get a limited company bank or corporate bank account and all sorts of other things. And so is that a massive ball ache to, hey, can you pay me to this bank account, please? And then they have to, it's a bit of a chore. But it's also the other reason why it's good to delay your incorporation to a degree is that you pay your first corporation tax 9 months after your year end. So I've just doodled a little line here. You can't see this on Clubhouse, but on Facebook Live I've just made a little line. So if I were to incorporate a business today, which is the 12th of March 2021, your first year is a bit of it's a bit higgledy-piggledy because there's 2 year ends here. So you then have a year-end accounts on the 11th of March 2022 because it's the first 12 months of trading. But then there's this weird thing where you have a second bit of accounts. So you then have another year which runs from the 10th of August. Sorry, not 10th of August. March. April. I think it's 10th of April. You just have the
rest of March. So your first year end runs until the end of the calendar month.
End of the month, yeah.
Your business.
So
you'll have one set of accounts which will cover 12 and a half months, but you'll have 2 corporation tax returns,
yeah, exactly.
And they're due for payment by the 31st of December.
Yeah, but you pay the 2 year end corporation tax 9 months after. So basically, from the day that you incorporate your business, you'll be paying your corporation tax roughly 21 months later. And so if you, and I've made this error it's not really an error, where I've set up a company, it's done nothing for like a year, and then when I started, getting going, I didn't have that sort of cash flow on hand, because that's money. Obviously, corporation tax and VAT, VAT is not your money, it's the Crown's money, and that you're simply holding it on for them. But being able to have a sort of a 21-month period where you don't pay corporation tax, you can use that capital. But mind you, it then comes down to what type of business you're running, because if you're running a business for scale and you're trying to grow this aggressively, you don't actually want to run any profits through the business, because profits means you have to pay corporation tax, and corporation tax is basically wasted money. So if you end up, making 100 grand profit in the year, and you'll end up paying £19,000 corporation tax, or what was it? I think it's going up to 25% if you're above a certain level. That's 19 grand that you could have spent in the business instead of sending it to the Crown. So again, apologies if I've mentioned this in a previous session, but what I tend to do is that at the end of every year, 3 months before the year end of whatever company, I have a calendar alert saying, hey, you've got 3 months to disperse profits. So I then work out with my bookkeeper what's the likely profit of the business, in 3 months' time, by the end of the year. And let's say it's, 100 grand profit. So what I'll then do is I'll then spend 3 months dispersing 100 grand's worth of profits, because I don't want to pay the 19 grand corporation tax. So, and you can do all sorts of things. You could buy a property, you could buy another business, you could do all sorts of stuff. But typically for me, I prefer using boomerang money. And so I just plow it all into marketing, because any money, if you have a good marketing sort of client attraction journey, any money you put into marketing is boomerang money, because for every £1 you put in at the top, £2 come out the bottom over a period of time, depending on your marketing and your company. So normally when I disperse profits, I'll be like, okay, I'll just pump it all into Facebook marketing. And so by the end of the year, the company will post 0 profits. But guess what? You've just plowed 100 grand into marketing, and it's going to come straight back. And so for businesses that I try and scale fast, I don't show any profits. However, this can be troublesome or a bit of a dilemma if it's your only business. It's fine for me because I've got other businesses where I take dividends from, and so those companies have to show a profit, because you can't take a dividend if a company isn't in profit. Otherwise, it will be an overdrawn director's loan account, and you don't want to get. I had a sticky issue with an overdrawn director's loan account like 10 years ago, and I didn't really understand it. Basically, I was taking dividends from my company, yet the company didn't have the profits to pay the dividends. And so, that was a bit annoying. So what are your thoughts so far, Zoe? Feel free to just stop me if I'm saying anything wrong, because I'm not an accountant. I'm just a simple business owner sharing some hindsight. And Raymond, you got the mic as well.
This is is your room, so I don't want to come in here and contradict you, and
No,
I'm
it's
just going
cool.
to try and add to the conversation.
Yeah.
Just, I'm a very cautious person, so I think just to really completely counter everything you've said,
Yeah.
there are quite a lot of ways you can take money out of your business, and one of your options if you run a limited company is to put yourself on a payroll. A lot of directors will do that so they can take some money out. You can pay money into your pension, that's tax free, and like you said, there are other investments you can do. If you spending money on marketing is great if you want to be spending money on marketing and you are ready to scale and deal with the additional work that is going to come in, and you're certain that that is a good investment for your business, but it won't be good for everyone. And
True.
Facebook ads and all sorts of ads only work if you're already doing something organically that's working. So really take advice from experts about what's going to be the right move for you and your business. Don't be afraid of paying tax. If you're profitable, you're going to pay some tax. This is okay. And also I would say to put money aside for your tax bill. If you know that some tax is going to be due for payment, don't spend it on something in the sort of hope that you think you have a strategy that's going to bring that money back to you in time. I would take the cautious route, put it in a savings account, and then if you have got the money left over, then brilliant for you, and you can do whatever you want with it. I really, one of the things I recommend to small business owners is that they read Profit First. So
by Mike Michalowicz. Great book.
Absolutely, and go and have a look. It will get you thinking about taking profit out of your business, paying yourself properly, putting money aside for tax, and really stripping down your expenses. I think expenses are often the thing that businesses get carried away with.
Yeah.
And marketing is an expense, so you want to take money out of your business at the end of the day, and you want to set it up in the way that it's going to serve you and your own goals. So I'm definitely taking the cautious approach. I hope you don't mind, but I think sometimes it's good to sort of have a balance on it.
Yeah, it's really good because context is everything. So for someone that's brand new in business, that's never been in business before, going down the cautious route is exactly the route that I would recommend. What I do is obviously a little bit different because I've been around the block and I know what I'm doing in business, and marketing is how I've grown the businesses. But yeah, so it's good to get the other. It's good to be cautious to begin with. And when you're first starting out, there is so much in business that you just don't know. Like, I remember in hindsight, after a couple of years in business, I thought, I'm doing all right now. I think, I'm getting the hang of this business stuff. But now me looking back at, 8 years ago, I'm like, there's so much you still don't know. And then when you start getting into mergers and acquisitions, you really don't understand business properly until you get into mergers and acquisitions, because then it's like a business on a whole nother level. And when you can sort of get your head around M&A, it makes the average running of a normal business so much easier. But yeah, that's a whole nother topic. So Raymond, Ray, mate, you've got the mic. Sorry, it's been a while since you put your hand up. Sorry.
Yes. No worries, Simon. So I've got a practical example for you.
Okay.
I'm employed, day job. I'm in the proof of concept at the minute.
Cool.
Importing some stuff from China and the States to resell here. I've worked everything out. My net profit after everything is going to be 20 to 25%. Now, my issue is that my salary is 50 grand a year. So I am pushing higher rate tax if I get any bonuses through work. And at the minute, what I'm doing is I'm doing all the side stuff through a separate personal bank account.
Yeah.
But my concern is that I'm doing all of this, and the position that I'm in, higher rate tax, is just going to eat any profit. And my only intention for the next 2, 3, 4, 5 months is just to take the 5 grand that I started with, roll it over into 6, redo the same thing, and just keep rolling it till it's a bigger amount before then potentially looking at incorporating. But my concern is I'm still going to have to reflect this as earned income as a sole trader on the side of my normal job. So from a practical perspective, anything I can do around that? Any ideas? I don't know if that's somewhere maybe Zoe can help on that. I have had a limited company in the past when I was a self-employed contractor, so I do have a good concept and a good grasp of all of this. Yeah. But I don't feel at the minute it's the right time to incorporate because there's not enough turnover and there's too much admin and additional cost that's going to come with doing that.
So there's there's a whole bunch of different ways to skin a cat, so I've been in that situation before, and the route that I took was to I incorporated a general holding company, or just it was basically a holding company, and that was the company where I operated all of my little projects, and because I didn't know which project would do well, etc. And I guess it really depends on your certainty and the probability of your project or your side hustle doing well. Because what then happened, once I knew that the project was definitely going to be, take off and etc., I didn't really care too much about the tax thresholds, etc. I tend to sort of default into abundance mindset instead of scarcity mindset. So what I thought I would do is I was like, right, I'm just going to take it on the chin. I'm going to set up this other limited company. I'm going to beast it, and then I basically just took it on the chin. Now, from a tax perspective, I could have been wiser and more efficient. Like I could have set up that limited company to make no profit, so you wouldn't have then gone above the threshold. But and when I say not making any profits, basically every penny you make, you simply reinvest back into the business, more stock, more customers, etc. But yeah, it would be interesting to see what Zoe's take on this is, because I think what I would do probably isn't what most should do.
See, like I said, my concern is just I'm very uncomfortable with limited company. From a sole trader perspective, my only worry is that obviously everything gets attributed to me as income, and I'm trying to find ways of going, well, I didn't really make a profit. I mean, I'm keeping a record of absolutely every little bit of stock that I'm buying, every transaction that I'm making, exchange rate fees, and all these things to try and show that, look, I'm not actually making a profit. But yeah, like I said, from a sole trader perspective, I'm just a little bit lost at the minute, to be honest.
Go, Zoe.
I think it is income, so it's going to have to go in your tax return, unless if you put it through a limited company, then you can decide when you take the money out. So, I mean, one thing you could do to reduce your tax bill is to pay some money in, and then you've got some more of your basic rate back. But that is the challenge for sole traders, unfortunately.
Yeah, I would obviously this is your call, and I can't give any financial advice, etc. I would just incorporate the company, so it's not pushing you over that line, and then just try and beast it with the business, mate.
Okay. No, yeah, like I said, I'm in proof of concept at the minute.
Cool. I
will probably feel more comfortable once this is the first cycle. Once I've done the second cycle, I think I'll be more comfortable at looking at incorporating that, because like I said, I know I can take money as and when from a limited, and I can pay pension from limited and all those things to use that, because I've done that in the past. But yeah, all right, thanks a lot.
And also with a limited company, there's all sorts of benefits that you can do. Like if you're working from home, you can your limited company can pay a percentage of your rent or mortgage, and there's all sorts of other legal expenses that you can run through the business to effectively reduce your personal outgoings, so to speak. So it is worth chatting with an accountant or your accountant or bookkeeper and say, look, what are the legal things that I can run through the business instead of me personally? So then your personal outgoings will drop a bit. Sorry, Zoe.
I'm going to disappear.
Sure.
But what I'm just going to say is, if you want to know what those expenses are, if you go and Google Free Agent A to Z guide of expenses, Free Agent is a accounting software. They have some really good free resources, but they've got a download you can get if you're a sole trader or a limited company, and it just tells you a load of expenses that you can claim. So that is probably helpful for anyone running a business. But thanks for letting me sit up.
Yeah, no worries. Thanks.
Zoe, sorry, just one last thing before you scoot. Sorry for interrupting. What was the name of the book you mentioned earlier?
Profit First.
Profit First.
Yeah.
Okay.
Great.
Take care.
Cool.
Bye.
Toodles. Bye. We have Pooja. Is it? How do you say your name? Is it Pooja?
Yeah, that's right. It's Pooja.
Pooja.
I think somebody just mentioned. Hi. So I'm a financial planner, and I think you guys did mention the pension that you can sort of look at doing to sort of get your corporation tax relief if you were a limited company, but obviously your basic rate tax relief if you're putting it through as a sole trader. The other thing that you could also do is, if you've got a limited company, is any sort of insurances that you may have on a personal side, you can put it through the business as an expense.
Yeah.
So that's something else that you can also use.
Yeah, definitely. There's a lot more that you can run through your business than people think. Like pretty much every holiday that I've had, to a degree. So, no, not every. A lot of trips abroad have been all business expenses and legitimate business expenses, which have been great. So yeah, definitely look into that, Raymond. So right, what other questions do we have here? So we had a whole bunch on the Facebook Live. I'm just going to scroll up. 1 second. So AD had a question. How much roughly would a typical accountant charge for a first year in business when your business has turned over around 80 to 85k? It's a tricky one, AD, because it depends on transactions. I mean, how many transactions have there been? Is it one transaction? And if that's the case, or a handful, it's not going to be that expensive. But if it's, hundreds or thousands of transactions, it's going to be a bit more time consuming. So I think just scrolling down, I think Gary Martin, he said, depends on who you go with. To be honest, I charge £75 a month for a non-VAT registered business and one director, includes software, phone calls, tax returns, etc. Yeah, so it's your call. Like, so some people charge based on revenue, but really it's down to the amount of transactions. I find that's the thing that adds the workload, so to speak. But do we have any other questions? I know we've gone, going on for 50 minutes now. I still haven't had breakfast. So any questions on Facebook or Clubhouse? I think just to sum it up, this is just my personal opinion and just from my own hindsight. I personally feel it's quite important. If you're setting up your first business or first side hustle, etc., you don't incorporate. Do not incorporate, because you're like, what if your business side hustle doesn't work and you give up and you're like, oh no, I hate business, it's not for me. Then you've got to go through the whole rigmarole of liquidating a limited company, etc., which isn't a big or bad thing. It's just a chore. And so, only incorporate the business when you know that your business is actually going to do well and continue. So, I think this is probably the most inconcisive live session we've done so far. But that's only because tax and accounting is not my bag. It really isn't. So, last chance for questions. Failing that, we're going to shoot off. I'm going to wait for the 15-20 second lag on Facebook Live. Right, I think we're going to call that a day. So thanks everyone for being here. Hope it's helped. And if you are, again, shameless plug, if you are getting into business or a new business owner, definitely check out thewap.org. Thewap.org. There's so much in there that helps you set up your business, etc. So, cool. Love you. I've got to love you and leave you. Don't know what we're going to do on Monday. That's the next session. But yeah, I'll see you 12 o'clock on Monday. Toodles. Bye.